All right, so I'm going to do a little update on the Comex market, and Lindsey Williams is releasing a new DVD. And he says he knows somebody that's even tighter with the elite than he is and has been given some information. We're about to see what happens with that. I did go ahead and order the DVD. Might as well do it like I usually do. Give you guys a summary update when it happens. But it says it's going to cover who will be the next president of the U.S., why no financial collapse in 2015, hear from someone in contact with the elite, political correctness, 5 firearms every American should own, and is war inevitable? So like I said, I went ahead and purchased it, and I'll do a summary like I usually do when something like this comes out, that or Webbot, it's been a while since he's put one out. It's odd, he's saying, why no financial collapse in 2015? But, the Fed made its decision at the end of December, and since then, the markets have not been reacting very well at all. It seems like, again, it's go time. But it still remains to be seen what he has to say. So I'm curious, and I'm sure you are. So as soon as that DVD comes in, I will watch it and then update you all with that information. So I was just reading an article at Silver Doctors. Commercials flee the Comex. This is the sort of thing you would expect to happen prior to a Comex default. Now, you know where I stand on the whole Comex default thing. Number one, the club runs it. There will never, ever, ever be a true default on the Comex. Something will happen. There'll be a terrorist attack. Something will happen, and it'll shut down if that was even going to happen. If a default was really going to happen, they would have something else happen so that it couldn't happen. Also, if you read the fine print, technically speaking, they can settle all contracts in cash. So even if the metal's gone and there's an issue that arises, they can settle all open contracts in cash. Oh, you're demanding delivery? Sorry about your luck. Here's your cash instead. That in and of itself, in my opinion, would trigger mass panic to own real physical precious metals. Because even if the Comex didn't technically default, but it's essentially is because it's saying, well, we're going to close out all these contracts that are open with cash settlements. You cannot demand delivery. That's going to trigger everybody in the whole world to say, oh my God, I need to get some precious metals in my hands, not this paper contracts. Because essentially that's a default. They don't have the metal, so they're paying you in cash. That is a default. But they won't call it a default. They'll just come up with some nonsense and say, we're settling cash. Or, again, they wouldn't even, in my opinion, wouldn't even want to do that. Because that's still telling everybody in the whole world what we already know. They ain't got the metal. So my mind tells me, expect a terrorist attack. ISIS hit the Comex, hit the CME group in Chicago, or whatever, right? That's usually how they roll. So I'm reading this, again, from Silver Doctors, from submitted by Peak Prosperity. And a lot of charts and a lot of information here. Covers markets, futures, ETFs, some other stuff. But we're just really interested in the precious metal side, more specifically gold. And let me scroll to that part. So he says the futures positioning. The COT report covers trading up through January 27th. Some interesting things are happening in the reports this week. During the coverage period, the gold commercials net position fell, but mostly because the commercials sold 25,000 long contracts, a huge change in just 1 week. They also closed 5,700 short positions. Commercials selling longs, especially in such size, is quite unusual at this point in the cycle. What's more, commercials generally increase shorts as the gold price rises. Managed money net position increased. They bought 11,700 contracts for longs and closed 4,700 shorts. This is normal behavior. The commercials dropping gold longs and shorts in this way definitely got my attention, he says. Is there less producer hedging at these low prices? Or are the commercials bailing out of the Comex casino just before it burns down, so to speak? There are several interpretations we could put on it, but the selling is helping to cap the gold price. But this time, it's not the much talked about naked short selling, it's just the commercials leaving the market, both long and short. And again, the commercials are the club. That's the banks, the big boys. They're the ones that constantly push the market wherever they want to push it, which right now, as you've seen, they've got a stranglehold on it at just over $14 an ounce for silver and $1,100 an ounce for gold. However, as I'm doing this video and it's 10:15 p.m. Eastern Time Sunday, gold is at $1,123.50 and silver is at $14.37. So is there going to be a new cap even higher where they try to sustain it? Because they've been slamming it every time it got above 14, back down to 13.90, 14, 13.80, back to 14, up 14.20, 14.30, boom, slam it down again. Same with gold, 10.90, up 1100, 11.10, up, slam it down. So it's, I'm going to say it's kind of healthily, if you will, in 11.20s. Silver's 14.37, but again, that doesn't matter. And keep in mind the video I did last week about this major discrepancy, this like 80 cents discrepancy of the silver fix from London and the Comex price. In my opinion then, and still is, there were some massive derivative time bombs, if you will, that were going to go off in the silver market. So they had no choice but to rig that price lower where they needed it to save those derivatives from imploding. That's my opinion. And after I said that, I went online a couple days after that, this weekend, and noticed some other sites. I think even Silver Doctors had an article at one point, or maybe it was Zero Hedge, saying kind of, their thoughts were kind of the same thing. So when you study this stuff for this long, and you see their game, and you see how they play at the club, it's real easy to come to that conclusion that they had to save their necks and absolutely rig the price so blatantly that two different mechanisms were way off, when normally they should be the same, as far as the price. I don't know if that has ever happened before, to tell you the truth. As far as I've been studying this stuff for years, I have never seen anything like that in my life. So keeping that in mind and then seeing this, where he's talking about this huge sell-off of shorts and longs from the boys, the club, right? Again, same time frame. You gotta really think about that. You can't say that's just a coincidence or whatever. You know what I mean? There's something going on here. What exactly it is, I can't sit here and say that I know for sure. And I always think back to Hurricane Sandy when I start to read stuff like this. How that storm, that big hurricane, was doing this by New York, and then curveball out of nowhere. And there was a girl on YouTube, I've mentioned this before, I don't know her name. She showed the weather radar, right as that storm was coming up the coastline. And you can see like 4 or 5 straight lines like a comb, massive in size, couldn't be anything but a chemtrail that was so huge the radar picked it up as if it was like a cloud formation. But when you see 4 or 5 straight lines literally in front of the storm as it's coming up, then all of a sudden there's these huge straight lines pulling it essentially to New York area, and then all of a sudden the hurricane goes whoop and follows those lines. It's not a freaking cloud. It wasn't a chance. By chance it happened. And what happened with that flooding, the waters that came in, it flooded 55 Water Street, the DTCC, Depository Trust Clearing Corporation, I believe, and their little subsidiary, CEDE, Seed & Co. And from what I've learned is that every stock you've ever bought or anyone has that's stored in their vault, it's never put in your name, even though you're really the purchaser of the stock or the share of the company or whatever that you're after. They put it in Seed & Co. It's like a custodian or something. It's weird. I couldn't quite understand it. But I'm like, what do you mean? So it's not mine unless I specifically asked during the time of the transaction to put it in my name. They put it in the street name in Seed & Co. and they're located at 55 Water Street. In their basement with $36 trillion of all of these shares of companies and whatnot, and you name it, stored there. Yes, in the basement. Yes. And subsequently got flooded with, as they reported, significant damage. And as I mentioned, we went to clean out after the storm went by, and a fire started during the cleaning process, causing some more damage. Man, oh man, oh man. Would I love to know with absolute certainty specifically what was lost in all that damage. What were they hiding? What were they covering up? Because you know that's what they were doing. But I have a feeling one day we're going to find out when this whole thing ends, that we're waiting on to end, this whole financial system, and people are starting to point fingers and who owes what, and I'm suing this guy and that. It's going to point there, and they're going to say, Your Honor, I'm sorry, the evidence was destroyed by Hurricane Sandy. It was an act of God. And if I was the judge, I would say, oh, God, as in Goldman Sachs doing God's work, or the real deal? Which one are you talking about? Because exactly. So he says, I'd expect this sort of thing to happen on the Comex prior to a Comex default. Not saying one is impending or anything, but the commercials are the insiders, and I definitely expect them to flee before any problems occurred or exploded, so to speak. I'm going to be watching this a whole lot more closely going forward. This was a big change, a big unexpected change, and it doesn't make sense given where we are in this cycle. So, thought I would just mention that to you. Keep your eyes on it, of course, or just listen to my videos because I will be watching it and I will inform you. Take care.